What's going on, guys? Matty A and my co-host, Mr. Breedwell.
What's up, guys?
Coming to you live with some market updates, some real estate news. We got a lot to cover today. A lot of stuff. But most importantly, how was your Thanksgiving?
It was great. Let's see. What did we do? We got had some turkey, just some regular turkey. Everybody says that ham is a Christmas thing, but we do ham. We do a smoked ham.
Did some ham too.
Yeah, it's very good.
Got after it. I definitely needed a crane to get me away from the table. I went in.
I had lots of
I grubbed hard. You guys did pasta?
Yeah, my aunt makes us like a pasta salad. It's really good. She made it with the lemon vinaigrette this year. Lemon olive oil, which was like, I was like super impressed with. 9 out of 10 instead of a 10 out of 10. But it was still good. I ate like a whole plate of just pasta.
Well, definitely a lot to be thankful for in 2020. If you're listening to this, if you're watching this, if you got a pulse, if your heart's still beating, you're blessed, right? There's a lot of things that have challenged people this year, but if anything, and depending on how you're looking at those things and engaging in those things, you've gotten a lot more what I like to call weaponized, or a little bit more capable, a little bit more confident. Even though it's probably been challenging for a lot of people, you learn through those kind of trials and that turbulence that you're capable of weathering whatever storm gets put in front of you. And I think that is something I know I've taken away in 2020. But we got a lot of news to cover with you guys today. Today is November 30th. If you are new to the show, be sure to hit that subscribe button. Where is my...
Hurry up.
Let me see. Oh,
I'm winding it up.
Come on. Come on. There we go.
Ooh, that's right next to you.
That is right next to you.
Oh, I'm getting good at
If you guys are listening to this, we are releasing these shows on YouTube as well.
Yes.
From the podcast. So be sure to hit that subscribe button. All we ask is that if you enjoy these news briefings, if you enjoy these financial talks, that you are subscribing, leave a review, share it with somebody. And don't forget to text us, 844-447-1555. You can check out on the show notes or in the show description. We got all kinds of free tools, free resources for you guys. I know many people have been taking advantage of your financial X-ray, which is obviously a strategic planning session to review your entire portfolio. Ryan's team will go in and do that for you guys. Make sure you're not getting overcharged on fees based on what goals you're looking to accomplish in your financial journey, that you guys have the right diversification, the right stepping stones, the right what I call breadcrumbs to follow down the path that you want to be traveling. So be sure to hit him up. Text XRAY 844-447-1555. And if you guys want to be on my deals list for all my accredited investors out there, those who participate in the apartment building, for those of you who got in on the laundromats, for those of you who want to know more about passive income investing opportunities, text the word deals to 844-447-1555.
That's a good number, man. I feel like that just rolls off the tongue.
I want to know, how was your guys' Thanksgiving? Shoot us a message, drop a comment below.
Where should they send it to?
844, or if you're on YouTube, 1555. Let's go. All right, guys. Some updates in terms of what's going on with COVID, vaccine news, how all of this ties into, of course, the stock market, your investments, also real estate. We got some new trends. I called some of these things happening, and I think we're going to see, definitely with some of these lockdowns, continuing to mount as we head into 2021. So we're going to talk about some of the exciting opportunities for those of you who are looking to invest in real estate or trying to plan strategically, as well as what that means in terms of the market.
Traditional investing, yeah.
Traditional investing. But with that being said, in light of what's been going on with the holidays, got some interesting updates. Black Friday shopping in stores. And this kind of ties into retail real estate. Big box retail real estate has obviously been under fire and under pressure. And it's mounting, and it's mounting big. And when you have headlines like this, there is definitely some writing on the wall in terms of retail as a real estate product and asset class that is going to be on discount here for probably the next few years. And there's definitely some pressure that is starting to mount for a lot of those who own retail real estate. Black Friday shopping in stores craters 52% during the pandemic. as e-commerce sales surged. So your investors, your businesses that have retail real estate, that brick and mortar, they really were hurt by, of course, obviously all these lockdowns, social distancing, but there were also a lot of headlines of people just packing in. So it's still obviously, Black Friday is not just going to go away. But with that being said, the big monopolies, the Amazons, right? And people are urging people to shop small, shop local right now. But it's that convenience of the big conglomerates like Walmart, like Amazon, right? That are really benefiting big from it right now.
Traffic at Shack too. I heard Radio Shack is like coming back
making
online.
a comeback?
Online only, but Radio Shack.
You know who bought Radio Shack?
Oh,
Ty Lopez.
Did he really?
Ty Lopez, man. People can hate on Ty Lopez all they want. Pier 1 Imports. What was it? Bed Bath & Beyond. He's an online guru that knows how to sell online, and obviously he's taking advantage of buying on the dip.
Radio Shack's got a great goodwill value. The name, I mean, people love the like small Radio Shack, going there. I remember when I was a kid, I used to love to go there to literally get radios, like the little walkie-talkies.
I loved getting the robot that ate all of the coins and then organized the coins for you. And
I was never brought to that. Good job, Mom. Shout out to Mom for getting that one.
So traffic at stores on Black Friday fell by 52.1% compared with last year, according to preliminary data from Sensormatic Solutions. Online spending on Black Friday surged 21.6% to hit a new record, according to Adobe Analytics.
That's a ton.
Cyber Monday this year is slated to become the largest digital sales day ever in history, with spending reaching between $10.8 billion and $12.7 billion, which would represent growth of 15% to the 35% from a year earlier. That's crazy.
That's a ton of money exchanging hands.
But so why, in times that we should be thinking a lot more intentionally about how we're using our money and not spending it on really liabilities,
yes,
are we seeing this surge in Black Friday? I think this consumerism mentality is something that if you are, I don't want to say addicted to buying, right? But if you are one of those individuals that is really kind of falling in that bucket, I would really question and just audit. Why are you buying these things, and what do you actually need them for, and what value are they bringing to your life, and how do they tie into the financial goal and picture that you're trying to bring to life? Because at the end of the day, going into debt, every 12th month of every year, for things that may or may not matter in the next 2 weeks or 30 days after that is something that I think a lot of people lose sight of.
Yeah, and then spending the next 11 months to get out of it,
trying to get
digging out in October and replanning for November and December. No, it's just, I think it's because, like what you're saying, people are just like addicted to the high of buying. I mean, I know we have no kids. Me and my wife have no kids. We have 2 dogs. We have a good group of friends, and our Christmas tree is stacked with gifts. I mean, I was texting my buddy today. We got our godson like a little radio flyer pusher car. Why? Because it feels good to give. The problem is, I think that you are touching on something when people tend to make sacrifices almost at the worst times and not at the best times.
Mm-hmm.
And sometimes people make a financial sacrifice to not miss out on giving their kids that gift or doing something. I mean, you see in movies all the time, the struggling parent making that, going into debt or putting that credit card down to get the Christmas gift. And that feels good to see. And it's like, that brings a tear to the eye, but it's honestly, it's bad financial decisions. And what that ends up doing is, like you're saying, digging you into a deeper hole. Mm-hmm. And pushing those goals even further back. So a better idea, spend time, if you can't afford to buy a ton of gifts, just spend time with your loved ones, be happy that they're still around. And, really giving a gift, it only goes so far. I mean, you can attest when you're an adult, You don't really give.
We haven't been doing gifts.
Yeah, I mean, I give my wife gifts now, and they're gifts for me. It's just a way for me to get stuff for us. Like, she probably won't listen to this, but I got her a gift, and it's really for us for our new house. She got me a gift, and it's really for us for our new house.
Right.
So we do stuff like that.
Yeah. Well, I think it just comes back to, again, having parameters around spending, and budgeting, right, and just being intentional with making sure that every money decision you make is aligned with higher purpose.
Yeah.
Right?
Wouldn't you rather not get that short-term buzz and then have a long-term success because of it? I feel that's hard to say though for people that have never tasted that long-term success. So also that's a mindset thing.
Yep, absolutely. So some updates for you guys in terms of what's going on with COVID. We have definitely seen a surge in COVID, obviously, over the last few weeks. Things have really kind of escalated, and the amount of what I'm seeing, fear that is coming from leadership levels of our government is kind of shocking to me, to be honest. I mean, I guess it's not shocking, but it is. I mean, we're literally hearing people say, if you went to Thanksgiving, Jackie Burks, one of the White House pandemic correspondents, she literally said, if you went to a Thanksgiving outside of your immediate family, they didn't even say likely. She said you are going to get COVID, and there are going to be a lot more people in the ICU for going to Thanksgiving. So it's a very grim, dark picture that our media and a lot of people are painting. Of course, the statistics are rising. Cases of COVID-19 continue to rise in the U.S. In November alone. The nation recorded more than 4 million new cases, and on Friday, the U.S. surpassed its first 200,000 case count in one single day for the very first time. Current hospitalizations have climbed to a record 91,635. I think, again, I'm not saying that this is not real by any means. I know a lot of people who have had it, people that you would expect, if they got it, get sick and really go down hard, that didn't. I know people that are healthy and are strong and are young, and they've been in and out of the hospital saying, man, this kicked my butt. So I know that it's real. One of the things that I wish they would be reporting more on is the recovery rate and the actual death ratio. That's one thing that I think would give people a little bit more, I'm not saying comfort, but just not making
clarity.
It seem so,
clarity is
just
good.
making it not seem so intense and extreme. And really, I think that narrative being pushed by mainstream media is to, support a lot of the other things that are going on, and the lockdowns, and giving more leeway to the people that are. I think honestly, they're doing a big disservice to our country and to the people in it, to the businesses, to the communities. We're all smart enough now, knowing what we know. If you feel the need to stay home, to hunker down, to basically quarantine or be very strategic in how you do those things, great. But it's just giving more of a platform and narrative to justify the draconian one-size-fits-all measures that I think are really hurting our country, hurting certain states, hurting certain communities. And then you see others that are, not following a lot of those things, and they're doing just fine. So quite interesting. But with that being said, some positive news in terms of the overall trends that I think are important to know. One, how it ties into the stock market, but two, how it just ties into your everyday life, your everyday community, which is vaccine news.
Yeah.
And as you guys can see here on the screen, we've got Moderna. They just, Pfizer, were kind of the first to market to at least go to the FDA and ask for emergency use authorization. And now we got Moderna to apply this morning, for FDA emergency use authorization as well. I mean, they're talking about, what was it, Germany that just...
I saw, gosh dang it, we just saw that headline pop up. Somewhere in Europe, I believe it was Germany, but we reserve the right to be wrong there because it just came up right before we started recording, they are within days supposed to start distributing and using the vaccine. And I believe that the European Union said that they're going to give it to frontline responders first. So I think that means the hospitals. So the hospitals and the hospital workers are going to get it first, which I think is a wonderful idea, mainly because I don't work in a hospital. But I think in the U.S. that'd also be a good idea to do that as well. It'll give us an idea how well it works because those people are in direct contact with the virus, and they're going to be working with people that are extremely, extremely in the throes of it.
Yep.
Other than that, we don't know much more. We did see that Pence came out and the U.S. military, I believe it was the Army.
Operation Warp Speed is...
And they said they have a plan to distribute it. And I think right now we're in that phase where, okay, vaccine is pretty much good. With I've seen the U.S. buy 100 million different doses of each one. And they're saying, okay, how do we get it distributed now as fast as we can? How do we get this vaccine out to as many people as fast as we can? And that's kind of the supply chain management question right now is really what people are scratching their heads on.
Yeah, and I think I was talking with one of my buddies who is a high up in Sutter Health, at least here in Northern California. And he's been on calls. He is head of the vaccine department, and it's funny because he's anti-vaccines, but at the same time, right? There's a time and a place for them, and this one obviously is needed for many different reasons.
Yeah.
Whether you believe in it or not, whether you want to take it or not, from an overall perspective of the health of the country, it's needed. And he was saying how they've been on calls with the CDC and the higher ups of a lot of, health organizations that are ultimately going to be getting it, and where are they going to be distributing it, and how are they going to be storing it, and how's it going to be, getting supplied. And he even said the CDC, he wasn't saying they were arguing, but there was a lot of debate going on still that, this has happened in such a short amount of time, and you're talking at such a scale. There's a lot of hurdles and challenges that go along with this. So it'll be interesting to see how they ultimately, get it into the hands or into the arms of Americans, and how, that plays out in terms of loosening up some of these tighter restrictions and hopefully flattening the curve. I mean, there was a lot of positive, at least data that has come out of those studies showing 95% efficacy. A lot of these people that, got it didn't get COVID-19. The people that thought they got it and got a placebo ended up getting it. So
I think it's just really interesting that, we'll back something that has a 95% chance of working, but we'll lock down for something that has a 99.6% recovery rate. So fun math.
Very fun math, and still doesn't make a whole lot of sense to me.
Doesn't make any sense.
But at this stage of the game, right, I'm trying to look for the things, that are stepping stones for getting us back to some type of normalcy. With that being said, with these lockdowns happening, we, of course, have seen, and I said this on, I believe, last week, more and more businesses being kind of put on their last leg. We can't, when you look at the business, just true economics of a lot of these financial models that really make it worthwhile to be in business, right? Most of the numbers are not penciling anymore. To be able to operate at a small fraction of the capacity you were able to operate at, and then obviously have enhanced expenses and overhead just to be able to either reopen or to stay open under these new guidelines, it's very challenging. I know here in Northern California, they said 1 in 3 businesses are not expecting to be able to make it through unless there's some type of stimulus passed or reopened up to the level that they could operate at, where it does make financial sense, that they're not going to survive. So we're going to see, through these lockdowns in a lot of areas of the country, especially in this dark, grim winter that they're talking about in terms of COVID, a lot of businesses and a lot of people get hurt, especially since a lot of fiscal cliffs are coming up in terms of eviction moratoriums expiring at the end of the year. We're seeing unemployment benefits expire at the end of the year. We're seeing a lot of things that are going to come to fruition at the end of the year unless some type of stimulus is passed, which they have not been able to do. But as you guys can see here, we're seeing, because of these things, rising unemployment. And I said, hey, we're going to see unemployment surge again. Jobless claims rose for the second straight week to 778,000, a sign the nationwide surge in virus cases was starting to weigh on the labor market recovery. We saw some good upticks in momentum with that. And then obviously with these shutdowns again, businesses either aren't going to hire or they're just going to be actually forced to close. So we're going to see layoffs and obviously a lot more people go on unemployment. So claims haven't risen for 2 consecutive weeks since July. Worker filings for unemployment insurance are down sharply from a peak of nearly 7 million in late March, which was insane, but they remain higher than in any previous recession. The pre-pandemic peak was 695,000. So that is something that, I think we're going to see more people really need some stimulus and some support. Businesses and, of course, just your average working American, and stimulus. I know right now there have been some calls for Pelosi to, they want Pelosi and Schumer to accept a smaller initial stimulus deal. So that'll be interesting to see if they actually get something done. What are your thoughts? Do you think they're going to actually get stimulus done before the end of the year? Just to read this before you answer, the pressure should be on when lawmakers return to Washington, which is this week, but they'll also have to move quickly to pass a spending package to avert a partial government shutdown by December 11th. So that's kind of the next date that they are up against and working against, which could once again distract from the need for COVID relief. So there's a lot of stuff going on right now that if they don't get some of these things done, we may not see stimulus checks or stimulus until February, is basically what they're talking about in 2021.
I just think that it's time to put politics aside, and I think it's bipartisanly agreed on that the American people as a whole that are in a rut right now need that stimulus to support the local businesses that are barely making it, and then the local businesses need that money to pay their employees and pay their bills so that they can stay open in those communities. That symbiosis needs to be able to be balanced out, and right now you have the people that live in those communities with no money to support the businesses, and the businesses in those communities no money to stay open to pay those people. And so you have this kind of vicious circle kind of spiraling down on itself. So that ultimately will backfire in areas of the market like cyclical areas where, discretionary areas where people don't need to buy stuff and are going, to stop buying those things. We've seen record sales in autos, home sales, and stuff like that. Eventually money can get cheap, but if people can't afford to
that's what doesn't make a whole lot of sense to me personally, right? Is like, we're seeing tens of millions of people. We know they're under financial duress, and it's going to mount at some point to the point where there's kind of a point of no return, and you just need that handout and that support, and you're relying on the government. That's my concern. At least the long term, short term, man, I really feel for so many people that are struggling right now. And if we don't get some of these things done, then that ultimately forces people into the breadlines and relying on the government. When the government's got you by the neck financially, that's a point of no return in a lot of ways. And it takes away the incentive to go out and work and to create, right? And to ultimately bring value to the marketplace and get rewarded for that. And then it kind of it levels the playing field for everybody, but there's no upside if you want to go above and beyond. Yeah, and that's my concern from a bigger picture, because, if we don't get any stimulus done, and again, it's a lot of, like you said, it's politicking going back and forth when we're playing with people's livelihoods and their health and
their lives.
It's unfortunate, you know. So Jerome Powell and Steve Mnuchin are technically, according to headlines, at odds over emergency loans. The Treasury Secretary, which is Steve Mnuchin, he is expected this week to move $455 billion in unspent coronavirus stimulus money into a fund that the incoming Biden administration cannot deploy without congressional approval. So the money is part of the $500 billion Treasury Department fund created at the end of March by the CARES Act. This was unspent money, technically. And the Treasury Fund set aside $46 billion for loans and loan guarantees to the airline industry, and the remainder was designated to support federal lending programs to businesses, states, municipalities. But now they're going to be shifting the money to the general fund, and that leaves just under $80 billion available for basically the Biden administration to play around with when they come in. But it kind of takes that immediate, hey, we got 500 on the balance sheet to go and deploy. Now they have to go through all this red tape and all this partisanship, right, and all this back and forth, which ultimately, again, it just puts the American people, the American businesses, our economy as kind of this bargaining chip, right? And so that's where it gets a little interesting to see this transition, because as of last week, President Donald Trump acknowledged his vanishing path to the results of the 2020 election. But of course, you know, he's not conceding. That's just Trump. But his administration did begin providing Biden with transition resources, which was required by law. So what do you think? Is this going to make it into the Supreme Court? And are we going to see any crazy changes that could really lead to something much bigger? Or is Trump just kind of doing everything he can to check the boxes, and if he finds something along the way, great? Or do you really think, I'm just curious, there was real fraud at a level that, quote unquote, stole the election?
I think that there was a lot of anomalies, like just from a statistical standpoint, that don't make a lot of sense, and I'm sure that that's happened in a lot of areas from Trump's side. You know, there's probably a lot of that. I think that ultimately, like where we kind of landed, just wanting to have full faith and confidence in our elections. That way, whoever is elected, we can be happy. Just a lot of stuff doesn't make sense, and you know, when stuff doesn't make sense, I scratch my head. I don't know how Joe Biden got more of the African American vote than Barack Obama. I don't know how he recorded the most votes in history ever. There's a lot of stuff that just doesn't make sense. But until you have proof, you know, the old saying, the proof is in the pudding.
Yep.
Our justice system would not allow that to go through for anything, and nor will I be a hypocrite and enforce one thing, and then when it doesn't line up with what my ideals are, say that, you know, oh, I'm going to kick and moan. I would love to have the current administration go in for another 4 years. But you don't always get what you want. And I was on here and I was very confident, and sometimes you're just wrong, and that's okay to be wrong. But the one thing that I've always joked, but I'm serious, is you're not going to see me, you know, I'm just going to vote in 4 more years and do what I'm supposed to do. I'm not going to, I think the thing that we need to kind of just put the nip in the bud is using the American people as the bargaining chip for politics. Because that kind of got started after the Obama administration, not by the Obama administration, but by the GOP and the Dems going back and forth, and then having, you know, using, you know, trying to, what am I trying to say? Impeach a president, and, you know, stalemating that. And so they're saying, okay, well, if you're going to do that, then we're going to stalemate you on your way in. Just nothing gets done.
Yeah.
It's almost like if everybody would just work together, you guys can think differently, but bipartisanly, if we could agree on some things, a lot more stuff would get done, and a lot more people would be happy. And this divide that keeps getting wider and wider and wider would not be presenting itself. I would argue that the mask situation right now would be completely different should the political weather and environment over the past 10 years been less vile and sharp, less divisive, more like, hey, we disagree on some stuff, but we can still, you know, sit down with each other. Matt and I like we say this a lot, but Matt and I don't disagree like we're at odds with each other. He thinks something a little differently than I, and I think something a little differently than him, and we're still here to tell you all about it. Yep. So at some point that went out the window, and that's a huge issue for the overall, for a lot of things, for politics, for how people interact with each other.
Yeah, just culture in our society in general, man. It's so contentious.
Yeah.
And if you're not aligned, then you're an enemy. And it's just weird how it got to, I mean, me and my friends growing up, we used to talk trash and, talk.
Yeah.
We didn't agree on a lot of stuff, but you can
think,
still.
This, not an Apple product, but like being social media and people
The
being
keyboard warriors.
Yeah, being able to say whatever you want to say and not have to represent yourself for it allows you to essentially just become spineless, and you can just say whatever you want to say because you don't ever have to answer for it.
Yeah.
And that kind of shapes you into just the type of person you definitely don't want to
be.
Yeah, exactly. Pretty much exactly like that.
With that being said, we got some updates for you guys in terms of obviously unemployment rising, financial hardship mounting, no stimulus technically in sight. We have seen, as you guys can see here on the screen, mortgage forbearance, real estate news for you guys. I said this. We're going to see some upticks again in mortgage forbearance because of these domino effects, right? Lockdowns, then obviously jobs being impacted, then finances being impacted, then what? Well, people either paying their mortgages or paying their rent, right? So it's this trickle and ripple effect of pressure that gets pushed down the line. And of course, real estate's going to be impacted. So you guys can see here the mortgage forbearance rate is up for the first time since June. Take a look at this. Why are they up? Well, the short answer is that homeowners have entered forbearance plans, have exited them. At this point, some borrowers who applied for forbearance earlier in the year have come to the end of the initial 180-day period, and they have not extended for another 180 days. However, according to the Mortgage Bankers Association, 76.76% of home loans in forbearance are in some sort of extension beyond their initial 180-day period. That is up from 76.4% 1 week prior. So we did see that uptick, right, come into play. At the same time, we are still seeing some pretty strong, at least in the single family sector of real estate, some strong data that is coming out. And to give you guys a quick update in terms of the National Association of Realtors Statistics and Research, they put out really the best data on single family housing. Nationwide, October 2020 brought 6.85 million homes in sales, a median sales price of $313,000. And 2.5 months of standing inventory. The median sales price year over year is up 15.5% as opposed to last October of 2019. And the inventory is down 1.4 months. So the supply year over year from October 2019 to October 2020 is down 1.4 months. That should show you that I know a lot of people are calling for this big housing crash in 2021. Again, I think we're going to see a lot more distressed inventory slowly trickle into the market. I think we will see people go, shoot, I got equity in my house and I lost my job, so I'm forced to sell, and maybe I'm going to turn into a renter, but I'm going to, cash in on a 150 or 200,000 in equity or whatever it may be. So we'll see some of that inventory hit the market. But because we are at record level lows when it comes to inventory and the demand is so strong and the rates, according to the Fed, are going to stay relatively low, that is going to be something that I think propels housing in 2021 to remain at a really strong level.
And the fact that it's also just historically not correlated with the market, which is kind of the pandemic and the market are the two, they're very much correlated. I think that what we can agree with here is, and you know what the funniest thing was? We both were saying that at the beginning of this year that we didn't think that the housing market was going to be affected negatively, and it hasn't been. Quite the opposite.
Yep.
That's probably going to hold true here. And I think to clarify on what Matt is saying as far as distressed assets, stuff that should already be on the market is going to get forced to be on the market.
Yeah, in 2021.
Correct. That's that's people that are on the fence. Maybe I have this second house. I don't need to get rid of it. I have this investment property I don't go to. I have this third vacation.
Well,
that stuff's going to get put onto the market.
And the linchpin, I think, in all of this ultimately is going to be, what does this stimulus package, how does that tie into everything? How does policy play a part in the real estate sector, knowing that, hey, if there's all these people in forbearances and the bank says, you know what, no, we're not going to do any loan mods with you. We're not going to defer this all the way to the back end of your loan. We want you to come current, and we're going to start the foreclosure process if you don't, versus some clause in the CARES 2 or 3 or 4 Act or whatever it may be that says, you know what, banks, who knows, right?
CARES 17.
We're going to incentivize the banks to work with you.
Yeah.
And all of a sudden another lifeline is given. Well, a lot of that distress and pressure that is mounting in a lot of the data we're tracking may get kicked way down the road or become completely irrelevant.
Like the debt ceiling.
Exactly. So those are things that we're paying attention to. Glenn Kelman, CEO of Redfin, said the level of demand in single-family real estate is absolutely insane. I would expect it to last into 2021 at least, if not well into 2022. There are so many people now who have decided they're not going to be able to buy a home by year end who expect to do so going into 2021. So especially as their kids shift school districts, or they don't need to go work in a city anymore and they're going to move to another city.
And it's taking longer to get the loans processed too.
Yes.
So you have to remember that on top of the refinances that are taking a long time. So that's kicking the, hey, we can't close in 14 days. You got to close in 30 days.
Yep. We did see single family houses, at least home sales, dip 1.1% in October from the previous month, but year over year it's still up.
Which is standard, right? Because it's cooling off.
This is the seasonality of, usually we say end of September to really, I've always just kind of pinpointed it until right after Super Bowl is kind of when you start to see, which is
end of February,
middle to end
March.
of February, when you see things to start picking back up, which is true seasonality.
It starts looking like this outside again. It becomes 71.
Well, and when half the country is buried in snow, people don't want to be moving during the holidays. They don't want to be moving during the cold. And I always say it's sell when it's warm and buy when it's wet, because that's ultimately when you're going to identify a lot of issues or problems. So the cyclicality, is that the word that I'm looking for?
Add that one, Webster.
Is just in terms of what goes on in the real estate market. This is normal. But with that being said, we are seeing a lot of trends where more home buyers are purchasing property. They're moving out of the cities and into the suburbs, small towns, and rural areas. These are trends reported by National Association of Realtors. So I think that, again, short term, we're going to see cities get hit pretty hard. And especially if there's continued lockdowns and all of the reasons why you like being in the cities, walking to your favorite restaurant or going and meeting up with a group of friends at the park or whatever it is, a lot of those amenities are restricted or taken away. People are going to go, man, I'll come back in a couple years.
Yeah,
I'm not going to pay this exactly. So I think that could create some good buying opportunities in the short term that people should be looking for. And of course, I still think there's going to be distress that, again, will hit the market, and there will be those buying opportunities in certain dips around the country. So a lot going on with real estate that, of course, we're going to continue to keep you guys. What do you think? Drop us a comment down below or shoot us a text at 844-447-1555. What do you think in terms of the real estate market in 2021 is going to happen? Are we going to see that crash? Are we going to just see it stay pretty stable? Are we going to see a boom? I want to know your guys' thoughts. Let's create a thread on that. With that being said, to wrap up, I want to get your thoughts in terms of the market as we head into 2021. Big news this last week, and I'm curious, when I was talking to you, I was like, big news, and you're like, it's whatever. The Dow crossed that 30,000 threshold. What the hell does that even mean?
I just think it's a big, even number, and it's fun to say. And there's a really famous trader on the New York Stock Exchange that has had a hat on for a few years that said Dow 30,000, and it's just kind of fun milestones. 10,000, 20,000, anytime the NASDAQ hits a new, 12,000 or 13,000, we get excited. Or
why do we get excited?
It's just a new level for it. And it all it is the maturation of that indice. So it just means that the companies inside of that indice,
they're stable, they're strong,
and they're becoming more and more and more valuable, which is what you want things to do. But that also leads to say it can kind of be a barometer for inflation. It'll tell you, if that goes up, then inflation is going to happen, and costs of goods and services are going to continue to move up in the future. So that means that the dollar should eventually rebound. So it's just a good sign for a lot of stuff. It's not anything to get FOMO from. There's going to be a pullback in the future where the Dow, if we had a 40% fall in the market and the Dow was at 60,000, it would fall below 240 or 230 or well around 30. So we'll be in this area again. It's just like anything, there's ebb and flow in the value of an asset. And it's really nice to get in like when that asset is valued at around 23,000 like it was in March. And then now to have it when it's valued at about 30,000 here in December. And that is the significance of it. The nice thing about what the market is, what that tells us though, and what makes me feel good, is that the Dow is representative of a lot of our industrial or our really big blue chip established companies. Mm-hmm. Not necessarily so much tech, although Apple is a part. Is it Apple or Microsoft? Gosh, I'm so terrible. Apple and Microsoft, I believe, are both part of the Dow. I just never look at the Dow that much. I'm on the S&P so much. But anyway, it's less tech heavy. Mm-hmm. And so when I see these big movements in the Dow, that makes me feel like it's less concentrated towards just technology.
So we're not just relying on tech value to, stabilize or really prop up that space, right? We're talking
Correct.
About our hardworking.
It also tells me that
deep industrial type of jobs that really build the infrastructure and represent a lot of the American people, right?
And it also kind of indicates that money's coming off the sideline, because that means that people think that we're getting closer and closer and closer to normalcy, because those tech companies generally make more money in a shutdown situation because we're going to use more technology during those times. So that's why that makes me really happy.
How do you think we're going to close this year out? And if you were to kind of give a crystal ball prediction, and this isn't an opinion, not advice on anything, but where do you think we're going to close out the year in terms of, are we going to see some more volatility to finish the year? Like anything major?
I don't know if it's anything major. I think that there could be a small pullback, not necessarily correction, but maybe up to 10% here coming through February. But that should, for long-term investors, that shouldn't be anything that worries you. A lot of people chase short-term, gains and stuff, which is just not long-term. That's not sustainable long-term. So compounding interest working for you is really what you want. But we see a strong end of the year, especially in value and blue chip areas. We are still very bullish on financials, energy, and utilities. I've been speaking on that for a couple weeks. We've seen over the past 8 to 9 days that being kind of the area that has started to really have a good bullish run. Technology is moving into this kind of consolidation pattern where it is tightening up. People are starting to decide where their money is going to be. Is it going to stay in tech? Is it going to move off the sidelines back into value? Are they going to go into cash? Kind of what's going on there. We decided to move into, like I said, financials, utilities, consumer discretionary, and value stock, mid-cap and large-cap mainly, over these past few weeks. And those are because those are the areas of the market that have just been lagging and kind of need to catch up at this point. So we see a strong end of this year, not as strong of a 2021 as we would have maybe a 2020. I'd love to be wrong on that, but just kind of a moderate year, because people are going to kind of be figuring out, testing the water, seeing what the new administration is going to do. The first 180 days in office for the new president, if the Biden administration does come through, which I'm expecting, a lot of people are going to be testing that and seeing what that is.
Right.
What is Janet Yellen going to do? Is she going to do anything drastic? Are they going to roll back anything immediately? So that time will tell. And I think after that happens, we'll start to get a little bit calming of the water. It's still a choppy day in the lake, but
yeah,
you can still jet ski.
Well, if you guys are, looking to talk more high-level strategy specifically to your goals, your investments moving forward, I highly recommend reach out to Ryan. You can text the word XRAY to 844-447-1555. That'll get you in contact with Ryan and his team to go over your investment portfolio, some of the moves you may be looking to make or to transition or to insulate or to diversify. Most importantly, just to make sure that you're not getting overcharged. That's, I think, the most common one we see from callers of the show who call in, reach out. They're getting they're getting raked over the coals. So don't forget, we'll put that link down in the show notes below. And I also want to get your take on this before we wrap up today. Salesforce deal to buy Slack expected to be announced Tuesday after the market close. For people that are investing in tech, what are your thoughts on this? And is this something that I guess my question as just an individual is, when we see headlines like this, are there any moves or plays?
No. Don't make any moves. You're already late to the party.
Okay, so that's what I was going to say, right? There's a lot of people that see this and go, oh, or they saw Moderna announces their FDA emergency use authorization, and all of a sudden the shares, jump 11% in the stock. How do you get ahead of that curve? Or what kind of advice do you have for people that are looking at this and going, ooh, Slack, should I be investing in Slack stock now?
So if you see a market headline, I would definitely not go and run and put your money in there. You'll become a late adopter. You can go look that up. That's a different story for a different day. How do you get involved in stuff like this? You become an accredited investor and you're sought after by for public offering price, for pop offers on IPOs. Or you work with an investment advisor and a firm that we spend day in and day out. We check the market. We figure out where to put our clients' money. So we kind of figure this kind of stuff out. Not saying we figured this out, but that's what you do. Or you're lucky and you make a good guess. Most people, just so you guys know, that get in on this kind of stuff just make educated guesses, and they're wrong more times than they're right. It's just the time that you're right, you make so much more than the time that you're wrong.
Yep.
That's kind of how. That's why a bird learns how to fly by jumping out of the nest. So you got to just take a leap of faith with it. Yep. And I actually just ran into a guy who put $10,000 into Microsoft back in 1992.
Ooh.
Same exact position, never sold it. He's got $170-something thousand in it now. His original 10 grand has multiplied multiple times. And it's because he just bought it once and he never sold. That's the type of win you can make versus if he could have put the 10 grand in to be worth 1,000 today. Yeah, he lost 9 grand, but he traded it off to make 162. So, just a good example there. Just a listener that had called in and just asked me to look at some stuff, and I was like, wow, that was a good 1992. That was a great move, my friend.
Good move.
I think this is a good deal. I think Salesforce is going to definitely make an aggressive offer. It's probably going to be cash and stock, if not all stock. And it's because they lost out last time in a bidding war to Microsoft for LinkedIn. And I just don't think they want to have that.
They're not going to make that mistake twice.
No, and what they can do as far as integrating Salesforce into integrating Slack into Salesforce and kind of maybe using it as an autonomously ran subsidiary. I think that it can make them a lot of money on their current portfolio and their current general fund of holdings, and it also can be an add value as far as, hey, this is something that kind of brings a lot of value to us. Here's your CRM, and then while you're off the CRM, you guys can communicate with each other still. I think that integration is going to be really powerful, so I am 100% for it, and I think it'll be great.
Long-term play, you think it might be a solid look?
Yeah. I know Google was looking at it, but I would almost guarantee that their legal team was like, we can't get this past antitrust, so don't even worry about it, because they would just have too much data at that point. So
let us know what your guys' thoughts are. Text us 844-447-1555.
Hit us up.
Are you bullish or bearish on Slack? With that being said, as always, thanks for tuning in. We appreciate you guys. We'll do all the research and bring it back here to help you guys on your wealth building journey, that march to that millionaire status and beyond. If you guys have any questions for us, drop those down in the comments section below, or you can always text us, 844-447-1555. If you enjoy these episodes, all we ask is that you share it with somebody, subscribe to the channel, to the podcast, as well as leave a review. It helps us out tremendously. And with that being said, we will see you guys in next week's episode. Happy investing. Cheers, my friends.
See you guys.